Hi guys, we'll continue with accounts consolidation today. Previous two sessions was about learning the whole concept. From now onwards, our concepts are almost done. We will be doing only sums. From now till the chapter gets over, it's sums. Each sum you will learn something new. When we get something new, I will teach you along with that sum instead of me teaching the concept and doing it separately. Let's get into the sums. Before that, just let's revise the steps once. This is not hard and fast rule, but generally it works for all sums. First step, what you have to do, guys, find out date of acquisition and date of consolidation. Then you find the percentage of holding and subsidiary. Then step 3, analysis of profits into pre and post. Step 3a, splitting that pre and post as to how much is for holding, how much is for. That is the key step, guys. The table is a key step. Then step 4 is computation of minority interest. Step 5 is computation of cost of control or capital reserve. What is computation of cost of capital? It is comparing two things, what you paid against what you got. What you paid is represented by cost of investments less pre-acquisition dividend. So cost of investments has a reduction less pre-acquisition dividend. The other side is what? What I got is net assets of the subsidiary on the date of acquisition, that to net assets which belongs to me, my share of net assets. We do that. That is step number 5. Step 6 was computation of reserves for the purpose of holding company's final consolidated balance sheet. Holding company reserves plus or minus my share of subsidiary. Then step 7, we are yet to see that step 7. We may see it today. What is that? Intercompany. If there is any trade receivables, trade payables, here we adjust. And last step 8 is preparing consolidated balance sheet. I gave you that template also. Don't big sums, all steps will come. We might mostly have a lot of small sums where we saw earlier compute only goodwill, compute only minority, like that. So we are going to do first initially sums like that before we go to the full-fledged sum. Illustration 2 for everybody. Study mat illustration 2, this book illustration 2, whatever book. Everybody has it as 2, guys. 2. XYZ Limited purchased 80% shares in ABC Limited. Who is the holding company? XYZ. Who is the subsidiary? ABC. Perfect. On 1st Jan for rupees 1,40,000. How sir, 1st Jan? That is the date of acquisition. Book only will have dates like this. In reality, don't expect 1st Jan, 31st March. Acquisition can happen any random date. Are you following, guys? But we won't have that much complicated sums. 1st Jan. The issued capital on 1st Jan was 1 lakh. We'll assume that only is the paid up share capital also, because no other data is given unless something else is given below. And the balance in P&L is 60,000. What to do with this data? By now you should know. I paid 1,40,000 to get 1,60,000. Correct? What I paid is 1,40,000. What I am getting is 1,60,000. Net assets is 1,60,000. How sir? They didn't give net assets. Net asset is asset minus liability or share capital plus reserve and surplus. Sir, which method to follow? Both you have to know, because each sum they will change how they want to ask. Okay. So on the face of it, what's the goodwill, guys? Without even reading the rest of the question, I paid 1,40,000 to get 1,60,000. Capital reserve of 20,000. But I don't know if it's correct, because there are still some adjustments that might change my values. During the year ended 31st December 2021. 80%. Correct. You will purchase 80%. Again, if you purchase 100%, 100% means it's correct. 20,000. That means we cannot do it like this. You're absolutely right. For those who it's strike right, 1,40,000 is what I paid. What you got is 1,60,000 into 80%. How much is that? 1,28,000. That means what comes? Goodwill. How much? 12,000. Are you following, guys? Common mistake. How many of you figured out, sir, we forgot 80%? Only 5 students and everybody, but everybody knows the answer, including me. I missed it. For me, it's okay. I finished my exams. But key thing, don't miss that. So answer is 12,000 rupees. Goodwill, good. Rajaram first figured it first. Recording you figured means good. Next, during the year, follow carefully. During the year, company earned a profit of 20,000 at the year and declared a dividend of 15. So they earned 20,000, they paid dividend of 15,000. Show by an entry how dividend should be recorded in the books of XYZ. XYZ is the holding company. Also, what is the amount of minority interest on 1st Jan and 31st? They are asking both days minority interest and check if there is goodwill or capital reserve. Hey, every question they are going to ask same three things. What is my goodwill or capital reserve? What is my minority interest on 2 dates? How to account for dividend? That's it. First, we already finished. While reading the question, we made mistake and we learned it. What is that? Goodwill. So goodwill was 1,40,000 minus 1,28,000. 12,000 is my goodwill. Did you understand logic, guys? Don't tell positive now, goodwill, negative means capital reserve. Book has something like that. Ignore all of that. Learn the concept. Done, guys. Now you have to find minority interest on date of acquisition and date of, and how the holding company, which is XYZ, will account for dividend that they have received. Correct? Let's do one by one. Simple sum. I don't want to give you time. We will do it together. I want you to participate when we are doing together. First, let me finish off dividend. Who is receiving dividend? XYZ. So when XYZ is receiving dividend, they will debit bank account. How much dividend they are getting? 15,000 is declared, but for me 80%. Again, I will not make the mistake. So 15,000 into 80% is how much? So what I am getting is only 12,000. So for dividend entry will be bank account debit 12,000 to what is the question? Two options. Credit investment and reduce my cost, or credit P&L account and say it's current year profit. How many of you P&L? How many of you credit investment? What is investments? When do you credit investment? If the dividend is paid out of pre-acquisition profits. Here, acquired on 1st Jan. Then look at the wordings. After acquisition, during the year ended 31st December 2021. That means during the year I earned another additional profit of 20, which is my post-acquisition profits. In that, dividend is paid. Correct? So I will credit what, guys? P&L 12,000. Basically, I will credit dividend income, transfer it to P&L. Are you following? Easy, guys. Rahul, understanding. Kritish, Rahul, yes, following. Next, we have to find minority interest on the date of acquisition and date of consolidation, which is nothing but share capital plus pre plus post into 20%. Here also share capital plus pre. There will not be post on date of acquisition. You can write 0. If you want, you can write 0. It will be 0 into 20%. Basically, it's share capital plus reserves. I like to split pre and post because most sums you will end up doing that. Can you compute, guys, quickly? Minority interest. Acquisition, how much? I'll compute this side. It will be 1,60,000. Okay, you've broken it down. Okay, 1 lakh plus 60. Right, breakup will be 1 lakh plus 60,000, which is my pre-acquisition, into 20%. How much? 32,000. Without calculator, you will get, guys. Without calculator, I can hear calculator. Next, date of consolidation will be 1 lakh. Share capital remains the same. Pre will also remain the same. Pre cannot change. Correct? Remember, guys, once pre computed, pre is computed. That's it. Plus, what is my post? I earned 20, but I paid dividend of 15. So what is left? 5 only is left. So plus 5,000 into 20%. 1,65,000 into 20%. How much, guys? 33,000. So my final answers are this. I don't know if it's correct. Let's check. Goodwill is 12,000. Dividend received and taken to P&L is also 12,000. Minority 32 is acquisition date. Consolidation date is 33. Let me go check. I don't know if it's correct. Goodwill is, sorry, dividend is 12,000 taken to my P&L. Goodwill also is 12,000. Then minority interest acquisition 32 and consolidation 33. Are you following, guys? That's it. Easy, huh? How many of you are able to do it by yourself? Questions like this will be 4 or 5 marks in exam. Promise, it has come in the past. Because if you don't know, see, sir, it's so easy, correct. But if you don't know the entire concept what we discussed in the previous 3 to 4 hours, this sum you won't even understand the whole thing. What is minority interest? Nothing you will know. Are you getting it, guys? Okay. Fine. At least these type of sums you have to be very strong. It's like this only is there in accounting standard. This is AS 21. See, some people message, sir. Recently one student messaged, sir, AS 14 not yet done in syllabus. AS 14 only amalgamation. We finished. So AS 21, don't message me saying AS 21 not done. That only is consolidation. Okay. Next. Illustration 3 we finished already, guys. Next illustration 4. Hold on, I will take the doubt little later. We can do it now, but okay, I'll do some more sums and come to 4. Okay, we can do 4 itself, guys. Actually, it's a beautiful sum, worth 5 marks, sometimes even 10 marks. The answer in study mat is so detailed, we will do it in a much simpler way and then cross check. A Limited acquired 70% equity shares in B Limited on 1st April 2021 at a cost of 10 lakhs. So my cost of investments, what I paid is 10 lakhs. See, I am again telling you what you paid against what you got. But exam don't write that. What you paid, cost of investment less pre-acquisition. When B Limited had an equity share capital of 10 lakhs and reserves of, now you know you can compute minority on that day, you can compute goodwill or capital reserve on that day. We will do that later. Let's go to the question. In the 4 consecutive years after acquisition, next year 1, 2, 3, 4, B Limited fared badly and suffered losses 2 lakh 50, 4 lakhs, 5 lakh and 1 lakh 20. Thereafter in 15-16, that means 5th year, correct? In 5th year experienced the turnaround, comeback they give and registered annual profit of 50,000, and in the next 2 years, year 6 and 7, recorded annual profits of 1 lakh and 1 lakh 50. Come back, guys. We are giving motivation lesson. Totally 7 years are there. After acquisition. After acquisition, how many years? 7. First 4 years is loss. They almost gave up. Then 5th year something happened. They got profit. Then once you get profit, that's it. 6 and 7. They continued with profit. That numbers are given. Is that clear, guys? Okay, what should I compute? Show minority interest and cost of control for each of the 7 years. That means you have to do working 7 times. Are you following, guys? I will help you do for the 1st and 2nd year. You will start doing for 3, 4, 5 because repetition, monotonous repetition process. Proceed. Go through the question. Have you understood? How many of you understood the question? Any doubt in the question? Clear? Okay. Yes, explain. Page number, illustration 4 of consolidation chapter. For you guys, illustration 4 of. I say illustration 4 of. Oh, not typed in the book. Okay. Nobody is typed. Fine. Sometimes it happens, guys. The person typing also is human. I didn't type. Delegated to somebody. This is illustration 4 as per study mat. You somehow note the question or you write and okay, let's summarize the question easily. You write in notebook itself. Again, when you will go home, where you will write in simple, we will write year 0 is date of acquisition. That day share capital was 10 lakhs. Reserves and surplus was 80,000. That only is the question of. There is a holding and subsidiary company A and B. A takes over in B 70%. For some of the students, it's there in book, means good to go. Then we have 7 years profit. What are the 7 years profit, guys? First 4 years loss. These 4 values. Then 5th year profit, 6th and 7th. That's it. You don't copy down the para, copy down the facts. So it will be 2,50,000, then year 3, year 4, let me write 2,50,000, 4, 5 and 1, okay. 4 lakhs, 5 lakh, 1,20,000. Okay guys, year 5, year 6, year 7, we got a profit of 50,000, 1 lakh and 1 lakh. That's it, question is done. This is the summary. We have to compute minority interest, goodwill or capital reserve for all the 7 years. Illustration 4. Basically, when you read the question, this is how you take the facts out of the question and leave the rest. This only is key for me. Those who are watching recording, if it's not there, just pause and write it. Those who are doing it now also, write it off. Who will go and search later? You will write page number, this, take photo, that's it. That photo you will only get back in Google Photos memory next year. You will not use it. That is a very bad feature. I don't like that feature. Yes. I am unable to disable that memory feature also. Every year. Okay. Now, let's proceed. Fine. We have to compute minority interest and goodwill first on the date of acquisition, then on the remaining 7 years. Correct? First, let's do date of acquisition, guys. That you know very well. Correct? How to do that? So, date of acquisition. First, let's compute goodwill. Goodwill is what you paid against what you got. Cost of investment. Cost of investment is 10 lakhs minus what I got is how much, guys? What I got? You investment also is 10 lakhs. Okay. What you got is 10 lakh plus 80. Correct? This time again we should not make the mistake. It's what you got is 10 lakh plus 80,000 into 70%. Correct? How many have you forgot 70%? Yes, remember 70. Okay. So goodwill or capital reserve is coming up. Goodwill only, you can look at the computation. How much is coming, guys? 10 lakh 80 into 70 is how much, guys? No, 10 lakh 80 into 70. 7 lakh 56. So you get 2 lakh 44,000 as goodwill. This is on the date of acquisition. Are you following, guys? What is minority on this day? Same 10 lakh 80 into 30%. How much? 3 lakh 24. So my minority interest will be 3 lakh 24,000. Is it visible, guys? Understanding? Guys, understanding? Now this is first year. Question is not that. We have to do this 7 times. So I'll prepare a table. Whenever you want to do for multiple years, table presents well. Okay. Now, for the remaining 7 years, should you do goodwill again? That only I spend concept, Nungambakam, buying ICA, all of that. The extra money I paid 2 lakh 44 remains 2 lakh 44 always. So, for all 100 years, whatever is there, goodwill will remain the same, but there is an exception. When goodwill will change in this question, the percentage of takeover is 70. If that 70 changes, goodwill will change. Because if 70 increases, again you are buying. If 70 decreases, you are selling. But fortunately, not in our syllabus. So goodwill will change if the percentage of control changes, which is part of your CA final. So for the time being, if percentage is same, goodwill will be same. I want you to know the logic. You should not remember like goodwill will remain the same always. It changes if percentage changes, but that's not in our syllabus. Okay. So now year 1 to year 7, what's the goodwill? 2 lakh 44,000. That's what we'll go check the answer. First, let's check if goodwill is correct. 2 lakh 44,000. Can you see, guys? Cost of control. What's the right term as per AS21? Cost of control. But interchangeably, people use the term goodwill, but cost of control is the key word. If you look at this, they are doing for all the years. Can you see? Every year it is 2 lakh 44. Correct? You don't even, I will not even write like this. Why to write 2,40,000 7 times, sir? What I will write? Write a paragraph. Goodwill will remain 2,44,000 from year 1 to year 7. That's it. Over. Why to write 7 times and waste my ink and time? Okay. Fine. Now come to minority interest. Minority interest will change or will not change? Will change because the reserves will change. So let's prepare a small table. Year 1, year 2, year 3. Okay. Are you following, guys? Okay. I will do initial 1-2 years. You will do the rest. First I am writing share. See, what is minority interest? Share capital plus reserves into 30%. So let me write share capital in all the 7 columns. So I will write here 10 lakhs, 10 lakhs. Each of the years it will be. Are you following, guys? So should I prepare only row wise? Can I prepare column wise? That's okay, your wish. Understand the table, okay. Second, reserves and surplus of first year. Starting, what was there? In year 0. So you write reserves and surplus of carry forward balance. First we will write carry forward balance. How much is there? 80,000. Correct? Let's focus only on year 1, guys. You fill it. We will focus only on year 1. 3 will be add current year profits. Correct? See, we already computed minority interest as 3,24,000. Okay. That is for year 0. This is for year 1 to year 7. You replace this with the year. I think they gave 31st March some years. We will write those years. Current year, first year, how much, guys? We have a loss of 2,50,000. So I will write 2,50,000 loss. Are you following, guys? Correct? So what is the net value which is available as net assets or shareholders funds? We will write as net assets or shareholders funds. How much is left, guys? 8,30,000. Are you guys following up? Are you understanding, everybody? So as a shareholder, my equity got written off, got eaten. Equity got eaten. Are you following, guys? So if net assets is 8,30,000, this is for year 1, guys. If I have to write down, for year 0, minority is already computed as 3,24,000. That we did before itself, date of acquisition. That is year 1 starting, this year 1 end. So now if I have to compute fifth one, minority interest at 30% of above, how much? 2,49,000. Are you following up? Are you understanding, everybody, guys? Those who are watching recording, quickly see what's there. I'm going to cover it. Okay. Fine. Minority interest at 30%. Clear? Year 2, we will again do it. So, what is the collective reserves impact in year 2? What is my total reserves year 2? 1,70,000 now. Loss I have to write here. Correct? Are you following, guys? Collective I have to write because I am writing here reserve and surplus carried forward. Total cumulative balance. What is current year profit? How much? 4 lakh loss. Super. Now what is the net assets? 4,30,000. Are you following what I am doing, guys? What is the minority interest now? Into 30%. 1,29,000. Like this we have to do for every year, guys. Year 3, what is going to be my collective loss? 5,70,000. Do it, guys. Year 3 losses. I hope you're understanding what we are doing. Guys, easy, huh? So, year 3 losses, 5 lakhs. What we'll do now? Net assets minus what to do? Can I find minority interest? 70,000 negative into 30% and write negative 21,000. Can I do that, guys? Are you following? Year 1 and 2, no problem. That means what's happening? Before the consolidation took place, the company had to pay minority 3,24,000. But after consolidation took place, subsidiaries net assets itself declined to 8,30,000. So what belongs to minority is 2,49,000. Then next year, year 2, subsidiaries net assets dropped to 4,30,000. So what I have to pay to minority, or what subsidiary has to pay to minority is 1,29,000. But year 3 is a full negative. That means if you write minority in negative 21,000, that means they will pay me. Does it make sense? If the company becomes like this, negative net assets, will the shareholder pay the company? No. That's why we have concept of separate legal. Partnership, no, partner will pay. The whole concept of company is, if company is not having the money, company only will suffer the loss. I can take the flight and go to UK, correct? I will not pay. Only company will pay, correct? Separate legal entity. So, if it's negative, I will not show negative. I cannot show negative because negative means shareholder should pay me, minority should pay me. Will he pay me? He will tell, all these days you are calling me minority. Now, when you want money alone, you will ask me. Are you following, guys? So, if it's a negative, the standard says, you tell me, guys, what to do? What to do? Show as 0. Minority is not there. No more minority interest. Their interest is to become negative. We can't pay them anything. That's it. It's a loss for them. This 70,000 will anyway be shown as a collective loss in the holding company. Overall loss. That full loss will be borne by the company itself. That's it. Are you following, guys? Understanding? Getting it? Now what happens in year 4? First, the cumulative loss. Cumulative is 10,70,000. What is year 4? Again loss. 1,20,000. Again loss came, guys. Very good. 1,20,000. Overall negative is how much? 1,90,000. What to show as minority? 0. I will not show minority as long as there's loss. So conclusion is, loss means don't show minority. Okay. Next, year 5. Year 5, 50 profit came, correct? But first let me do the same stepwise. Add both. How much? 11,90,000 loss. But this year profit is 50. But the 50 is not enough to make it profit, correct? So still I have a loss. So how much is that? 1,40,000. What will be for minority? 0. Minority can't come and tell, hey, profit is 50 this year in year 5. Give me money. Hey, see cumulatively. Last 2 years it was loss. I didn't even ask you anything. So when I have profit, you wait for the loss to get set off. Until I have overall profit, you have to sit down. You are minority only, no? Sit down there. Year 6, cumulative is how much, guys? 11,40,000 negative, correct? What is year 6 profit? 1 lakh. So year 6 profit is, sorry, overall losses 40,000. What will minority take? Nothing. Until that overall loss becomes positive, nothing you will get. Are you following, guys? Next, I am going this side. Year 7, overall is 10,40,000 loss. 10,40,000 loss cumulatively. What is the current year profit of year 7? 1,50,000. Super. So now collectively, profit of 1 lakh, overall profit of, so now minority will again come back at 30%. How much? 33,000. Are you following, guys? Let me check if it's correct first. That's it. I wanted to check the final answer. Can you see 33,000 guys? That means correct. They have done showing adjustment and all. Our table, this is the key table. Are you following guys? This is the final answer. 33 comes back. Till then it will be 0. But you will present in the notes to accounts that company has a loss of in these 4 years, which is accountable to minority, but it's not coming in the balance sheet. It will be part of my reserves, cumulative reserves. Following up, easy guys. It is a past exam question, multiple times for 5 marks. Same question is there in old syllabus study mat, but old syllabus study mat has different numbers. This is a new question with change of numbers. That's it. Rest everything is same. Are you following guys? Easy. So whether you don't know consolidation all steps, this is step number 4 of consolidation, computation of minority interest. Anybody has doubt in this, in any concept or any computation part? First here offline, anybody? Online? Yes, doubt? So minority should be calculated at every single day. You can calculate on any day if data is given. Here I am calculating for year 1 to year 7. Year 0 already calculated above 3,24,000. Okay. Fine. Can we proceed guys? Anybody else? Any doubts online? Fine. Okay, that's it. Are you understanding guys? That's it. Simple scoring sum. Okay. We will come back to this sum little later. Illustration 6. We have done a sum like this. First you read and tell if you know a sum like this. Okay. Hold on. Don't start solving. Illustration 6. For you I think it will be question number 5. I think that one question was printing mistake, so number is dropping. That's it. Illustration 6 or 5. 6 as per ICA, 5 as per book, some of you have. That's it. Okay. A Limited acquired 60% shares in B Limited for 20 per share. Who's the holding? Loudly guys. A. Who's the subsidiary? B. Following is the extract of balance sheet. They are given share capital, debentures, trade payables, assets, investments they are given. Correct? They are given the full balance sheet. Check if it's tallying. This is my liabilities. This is my assets. Tallying. It might not tally. Extract they have given. Tallying. No, I don't think it will tally. Okay. Fine. On the same day, which day? Date of acquisition. B Limited declared a dividend of 20%. As agreed between both the companies. Pre or post acquisition dividend? Pre. That means dividend should be reduced from my cost of investment. How much is dividend? 20% of 1 crore. Correct? 1 crore. So it will be, no sorry. No. Overall dividend first is 20 lakhs. Correct? In that holding share is into 60%, 12 lakhs. Are you following guys? See, dividend is share capital of subsidiary into, sorry, not like this. Correct only or wrong? No, we can do on face value also. See, 1 crore is the dividend into dividend declared is 20%. How much? 20 lakhs. 20 lakhs into my share is 60%. How much? That only I did know. So you are doing on share base. Both will be same. You can do on per share basis and multiply with total shares or value. It should be the same. Mathematically, are you following guys? Correct? Oh, you are doing on 20 per share. Huh? Dividend should always be on face value and not what you paid. Coincidentally, in this sum, on this 20 also, if you do 20% or something, I don't know if same answer is coming, but I don't want to compute. Leave that. Okay. Next. Rather, I'm only confused. Panta. Correct? Huh? No. Everybody understood 12 lakhs dividend. Huh? 12 lakhs is the dividend of holding. Now, PP was depreciated at 10% reduce. Investment to be taken at market value of 60 lakhs instead of 45. Calculate goodwill or capital reserve. Have we done a sum like this? Hello? Yes, we've done 2 or 3 times already. What do you have to do, guys? Net assets you have to compute. Cost of investment. Quickly, guys. What is cost of investment? I paid how much? I paid 20 per share. How many shares I got totally? 6 lakhs. 60% of 10 lakhs means 6 lakhs into 20. How much? 1 crore. 20 lakhs minus pre-acquisition dividend of 12 lakhs. You will get 1 crore. 8 lakhs. Come down. Find 1 crore 8 lakhs. Can you see it, guys? 1 crore 8 is what I paid. Net assets. Basically, asset minus liability subject to PP depreciated 10%, investment taken at 60 lakhs. Can I do here share capital plus reserves? No, because assets are going for a change. So, same way I am doing assets minus 10%, investments at 60 lakhs, rest everything will remain the same. So, my net assets is 148, in that my share is only 60, so it comes to 88 lakh. 80, I am not doing computation, we have done this enough number of times. You compare these both, you have only paid an additional amount. To acquire 88 lakh 80, you are paying 1 crore 8 lakhs. So, my goodwill will be 19 lakh 20. Are you following, guys? Everybody understanding? Have we done this sum before? Anything new in this? Nothing. It's just one more sum for practice. I should have given us homework, but 2 minutes, we finished it here. Clear? Huh? Everybody getting the concept, guys? Now, these kind of questions can come for a 2-mark MCQ. Earlier, it used to be a 5-mark question, but you don't need steps. See, roughly you can compute everything and 2-mark MCQ. Goodwill, capital reserve. He will give answers like, he will give 4 answers. He will give 2 answers without taking 60%. Common mistake. He will give 2 answers. One as goodwill, one as capital reserve. That's it. Doesn't matter. You compute, choose the thing. Let's proceed. Yes. Answer, same answer you are getting. Apana method is correct. You should get, see, dividend computation is simple. Don't try to find 3 other ways to compute dividend. Face value of shares into dividend percentage. That's it. 6 lakhs on the correct na, vera question correct irukkalam. But this question answer is 12 lakhs. Next. Illustration number 7. Good question, guys. Follow. We will do this, then go to a full sum. I want to do a full sum with all steps. Illustration 7. H Limited acquired 3000 shares in S Limited. Come on, guys. We are going to finish consolidation of subsidiary. This class and one more class. That's it. Consolidation of subsidiary will almost come to an end. H Limited acquired 3000 shares in S at a cost of 4 lakh 80. My cost of investment is 4 lakh 80. Super. On which day? 31st July. Be careful. Unlike previous sums, this is happening somewhere in the middle of the year. That to middle of the year, end of the month. Okay. The capital of S Limited consists of 5000 shares of 100 each, fully paid up. The profit and loss account for this company showed an opening balance for the year 2021 of rupees 1,25,000 and the profit for the year is 3 lakhs. So, opening is this, profit for the year is 3 lakhs. At the year end, it declared dividend of 40%. Record the entries in the books in respect of dividend. Assume profit is earned evenly Okay, the year is calendar year, don't take financial year. First, let me plot this into a timeline as to what happened. We are in which year? 2021 as per the question, guys. Recording, don't ask me, sir, old recording. Okay. Jan 21, December 21. Acquisition took place on 31st July 2021, and on the date of acquisition you paid some money, which is 4,80,000, which is my cost of investment, which anyway will only be reduced by pre-acquisition profits. They have told beginning of the year profit was 1,25,000 and profit for the year is 3 lakhs. That means whole year I earned 3 lakhs. So closing profit is 4,25,000. Correct? Closing. Are you able to follow, guys? Now, to find goodwill or to find anything, to find here they are not asking goodwill. What are they asking? How do you account for dividend? Correct? Look at this. Record, they declared dividend of 40%, record the entry. Correct? First, let me compute the dividend, guys. What is dividend computation? Compute what is the dividend? 40% on the shares of subsidiary. What is the shares of subsidiary? Question has the data. Search. Line 2. 5,000 shares into 100. So the dividend paid by subsidiary, if I come down guys, 5,000 shares into 100 into 40% is the amount of dividend declared. That means 5 lakhs into 40% is 2 lakhs without calci, with calci, same answer. 2 lakhs will be the amount of dividend. Correct? Hello? Am I wrong? Correct? Yes, Sushmita. Declared dividend of 40%. 5,000 into 100 into 40. Sorry? No. I am talking about overall dividend first. Overall dividend declared by subsidiary. In this, how much are we getting? 60%. So my share will be into 60%, which is how much? 1,20,000. Yes, Rajaram, no doubt. Yes. So profit for the year, that year. So his interpretation, what he is saying is, profit for the year is 3 lakhs. Year and whole profit is 3 lakhs. Correct. That is that year's profit. But opening balance is, so total overall will be 4,25,000. That's the interpretation. I am hoping question also have done the same way only. But they have not done. Okay, they have done it in your method. We will come to that. First, let me finish dividend, guys. Everybody clear with 1,20,000? 1,20,000 is the amount of dividend. For the dividend that I am receiving, entry will be bank account debit 1,20,000 and credit. What is the question? Credit P&L, credit pre-acquisition investment. Are you following, guys? Proportionate. That means we should find out how much dividend is from pre, how much is from post. Are you understanding, guys? For that only we are going above to find the split of how much profit is pre, how much is post. I know for sure 1,25,000 is pre. Now the interpretation is, after Rajaram's doubt, is it 3 lakhs earned during the year? So 3 lakh plus 1,25,000 closing is 425. Or like he's saying 3 lakh is going to be my closing balance. So profit for the year will be 1,75,000 is the current year profit. It depends on how you read the question. Look at this. The profit loss account of for this company showed an opening balance of 1,25,000 and profit for the year was 3 lakhs. That means 3 lakh is, ideally I will take, if it's like this I would have taken 4 lakh 25 as the closing balance is how I would have taken it. But going by the book, it looks like, no, they have taken like that only, I think. Yes, they have taken like this only, 4 lakh 25 is closing. So today Radharam has decided to confuse the whole class. Correct, we have done in the correct way, but it's good, please ask the doubts, don't keep it with yourself, ask the doubts. His doubt is 3 lakhs is closing balance or no, 3 lakhs is the profit for the year. So I am erasing all the Radharam's confusion on the board. That's it. Clear, guys? Already Vignesh will get confused. Now Radharam will confuse Vignesh more, means you should only answer his doubt. Okay. But Vignesh, feel free to ask the doubts. I am just simply saying don't take personally. Okay. Fine. Following, guys. Now I have to find out how much is pre and how much is post. In this 3 lakh, how much is pre, how much is post, guys? You tell me. In the time ratio here 5 months, here 7 months, 5 months. So I will split 3 lakhs into 7 months and 5 months evenly. How much you are getting this side? 1 lakh. This side 1 lakh 25. How 1 lakh 75 came? 3 lakh ratio I will show if somebody has doubt, into 7 by 12. How into 7 by 12 came? You WhatsApp me, we will go to school, learn and come back. So 1 lakh 75. So what is my total pre, guys? 1 lakh 75 plus 1 lakh 25. So total pre is 3 lakhs, correct? Opening 1 lakh 25 plus current year 1 lakh 75. Total post is how much? 1 lakh 25,000. Are you following, guys? Let's check if that's how it's done. One lakh 5 1. No. That is holding share. Yeah. We will come to that later. This I want to know before that. If this answer 3 lakh and 1 lakh 25 is correct, enga kuduthirukkom. Oh, okay. So I was searching if answer is correct. Total pre is 3, total post is 125. I am searching only for that. See, I am checking the answer is correct because I don't know the answer, guys. We are doing it together. So I need to cross check once instead of finding mistake in the last. Usually it's always correct. So total is 3, total is 1 lakh 25. Are you following, guys? Now, in this total pre and total post of subsidiary, what belongs to holding is only 60%. Always remember, when you are doing computation for holding, take only holding share. Very important. That's one common area where we miss out. So in this holding share is how much? H's share at what percentage? At 60%. Very important, because the remaining profit doesn't belong to me. So I can't even use that for computation. So 3 lakhs into 60% is 1 lakh 80,000. Total post 1 lakh 25 into 60%, 75,000. Are you following, guys? So for holding, that 3A magic table, when you prepare the 3A magic table, in that we will find total pre, total post of holding, that will be 1 lakh 80 and 75,000. Are you following up? Clear? So I will come back and let me write this table line again to see if you are understanding. This is the change pointer. So total pre what belongs to me is 1 lakh 80. Total post what belongs to me is 75, and total dividend declared is 2 lakhs. In that dividend declared is 1 lakh 20,000 for me. Correct? That means I am making a statement. Tell me if it's correct. The total profits of the company is pre 3 lakh, post 1 lakh 25, and total dividend is 2 lakhs. But out of that, what belongs to me is total pre 1 lakh 80, total post 75. So what belongs to me dividend in this is 1,20,000. So I am making a statement. The dividend that is paid for me is paid using this 1,80,000 and this 75 only. Correct? Of course, it's an estimate. We are taking it equally every month. But I am saying the 1,20,000 paid to me comes from what is belonging to me. My overall share is 1,80,000 plus 75. From this I got 1,20,000. Are you following up? Now I should know how much is pre, how much is post. In other words, from this 1,20,000, which was used first, pre or post? Are you following? I can take multiple assumptions here. One assumption can be full 1,20,000 is paid from pre, so I will credit my investments. The other assumption can be first I used fully post, then balance I am using pre. Or the other assumption can be in the ratio of 1,80,000 is to 75. I can take any assumption. We have a question for that, but here question is given clearly. Assume profit is accruing evenly, and that's what we did, evenly we took. But now which assumption to take? Let's take proportion, because whole sum we are doing proportion. So 1,20,000 into 1,80,000 divided by total 2,55,000. How much? 84,706 is pre, balance is post. This is one method. This is one method. Another method is just using same ratio of 7:5. If I do 7:5, you will get how much, guys? 70,000, 50,000. Are you following, guys? There are multiple methods. We have a sum where question specifies the method. Here, since method is not there, you can take an assumption. If you take 84,706, the other one will be 35,294. Now, how my entry will change? Follow. If it's going to be in ratio again, my entry will be anyway bank account debit 1,20,000 to investments 70,000 to P&L 50,000. Correct? If I use ratio of, this is if I use time ratio. Correct? If I use time ratio. Next, if I use pre and post ratio, my entry will be bank account debit 1,20,000 to investments 84,706 to P&L 35,294. Are you following, guys? You tell me the answer for this, then I will say you understood logic. What if the question says dividend is first declared using fully pre, then entry will be bank account debit 1,20,000 to investments 1,20,000. Are you following up? Because I have pre up to 1,80,000. What if they say fully post is used first? Are you following, guys? If fully post is used first, then bank account debit 1,20,000. First P&L fully post to P&L how much? 75,000 fully. Correct. So 2 P&L 75,000. 2 investments, the balance 45,000. That means 4 answers are possible. Are you understanding, guys? See, in the book they would have taken mostly time ratio for this question. They have taken what, guys? Look at this. Time ratio 1,20,000, 70 and 50. We are going to right away do next sum. You are going to do in all the 4 combinations. Okay. So look at this. In time ratio means this one. If it's ratio of pre to post, this one. Fully post, fully pre, we have it here. Are you understanding all the 4 cases? This question, why time ratio? Because question is silent and they use the hint evenly arose all the year. So I am using time ratio. Why? Because dividend is declared for that year. When dividend is declared for that year, how can I use pre-profits of previous year? So I will use profits only of this year. So this year I am going to take time ratio. That's why it makes logic to go with this in this particular sum. Are you following, guys? Rishmita, understanding? Everybody clear, guys? So for this sum, your answer can end with this part. Clear? Everybody, hello? Ashwin following? Yes. Time ratio, acquisition is happening on 31st July. So Jan to July, how many months? Vignesh, 7 months. July ending to December, how many months? Count pannu. 6 or 5 or count, tell loudly. One month you tell loudly. From 31st July to 31st December, how many months are there? 5 months. So 7 is to 5. 7 is to 6 it will become 13 months. Not in our, not for now. Next. I want to take another question which is similar to this. Okay, next question, guys. Searching itself takes away half the time. Okay, which question we just finished now? Illustration 7 over 9. Seven we did now. Okay, I think we don't have a sum like that in book, but I will try to get that question for you. Imagine the same sum. You add another point. I was thinking it's there. Add another point. If they say, what if the company uses or company declares dividend in the ratio of pre and post? Then you will take this as the answer. What if the company uses pre first? Then this is my answer. What if the company uses post first? Is that like this? They have asked a 5-mark question in exam. Same question, but they gave 4 cases. If dividend is declared using time ratio, what you will do? If dividend is declared using pre and post, what I will do? Fully pre, what you will do? Fully post, what you will do? One question has come in the past. So don't think sir is giving, no. It's not there in our book here, but very much important. Are you following, guys? So if anybody wants to make a note, can make a note of these other 3 entries. Are you following, guys? How to compute also, just make a note, because later while revising, what if it's not there? Yes, Vignesh. Dividend, as far as I remember, always one method only. Face value of shares into dividend. That's it. I will explain question number 3 in some time. You message me for that, or I will take an end of the class. Everyone writing this. Question number 3 also is same. Face value of shares. There is different method because their face value, if I remember now. Question 3, face value is not given. So we are trying to find out the number of shares, then find dividend. So you are dividing by 20 to find number of shares. They have not given the number of shares. So we found the value of investments divided by price paid per investment to find number of shares into face value. That's what we did in question number 3. Sorry? That's why we're using that later. To find face value is 10. What is number of shares? It's not given in question 3. So number of shares into face value. Others you can keep writing this. Done? Done writing? Okay. Recording also, let's proceed, guys, everybody. 7. So question 1 to 7 all over. Any gaps? Except one question. 4, that's foreign company, we will do that later. Illustration 4 is different. We will do that later. Next. Okay, beautiful sum guys. Illustration 8. Proper exam question for 10 marks or 8 marks. Now you are at a stage where you should be able to do this. If not, the last 4-5 hours we've spent, it's my fault. You are not able to understand. Nothing new. Everything you can do it guys. Let me read the question. You are going to solve the sum. Get confidence in the sum. A and B provide the following information. It's a new question in new study mat, but easy, very easy. They are given share capital, preference, general reserve, liability side they are given fully. Correct? Okay. Already there is a dividend payable. Then they are given asset side also, few assets. Balance sheet should ideally tally because they have not used the word extract. It should tally, if not it's an extract. That's it. Come down. A Limited purchased 3/4 interest in B Limited at the beginning of the year at a premium of 25%. Okay. So this balance sheet is end of the year or beginning of, we don't know. Okay, fine, we will see that. At the beginning of the year, generally balance sheet means it will be end of the year. So the question is silent, I will take it as end of the year. So beginning of the year, 3/4 means how much guys? 75% holding subsidiary, a premium of 25. That means if face value is 100, I paid 125. If face value is 10, I paid 12.5. Next, following other information is given. Profit and loss of B Limited include 1000 brought forward from the previous year. That means P&L out of this 1790, 1000 is previous year. Okay, balance is current year. Correct? Because I purchased beginning of the year. So beginning of the year profit is 1000. Okay. General reserve is brought forward from the previous year. So this full general reserve is pre. The directors of both the companies have declared dividend at 10% on equity shares for the previous and current year. They have declared double dividend. So one will be pre, one will be post. Correct? Next, so dividend payable is here. We have to compute which is how much. From the above information, calculate pre and post minority interest and cost of. Basically is asking you to do working note or step 1, 2, 3, 3A, 4, 5. Till 5 you have to do. Correct? Only balance sheet is not asking. Basically almost full sum. So let's do it together guys. First write down step 1. What is step 1? Date of acquisition and date of consolidation. Date of acquisition, they have not given the year itself. So you can write date of acquisition, beginning of the year. Date of consolidation, end of the year. That's it. Correct? How much dividend rate? 10%. Okay. Are you following guys, everybody? Important computation. It's next second step, holding and minority. Holding is 75%, minority is how much guys? 25%. That's it, 1/4. Next, from step 3 onwards, I will help you out, but I need you to participate, be with me. Profit and loss account of subsidiary as given in the question is 1790 is my closing balance. Correct? It's the closing balance. So 1790 in this opening balance P&L brought forward is 1000. Are you following guys? So what is current year profits? 790. But it's not that easy. It doesn't get over just like that, because from current year, look at this, directors of both the companies declared a dividend of 10% on equity share for previous and current year. Now in the balance sheet, Can you see dividend payable 600 and 500? Is this dividend of 1 year or 2 years? Dividend of 1 year or 2 years? Is it both the years included or 1 year? Only previous year, because what is 10% of 6,000? 600. That means 1 and 10% of 5,000 is. That means out of the 2 years, for 1 year dividend is declared already and accounted for. Second year, now only I have to account. Correct? Are you following, guys? So, from the 790, I have to reduce dividend for the current year for both holding and subsidiary. Are you following, guys? Understanding? Hello, are you all with me, guys? So, I will reduce how much, guys? 500 dividend for current year, and then I will be left with 290. Yes. Correct, closing balance. Your closing balance. I am assuming it to be closing balance because no other data is given. Let's see what they have done. Working note. It should be closing only. Okay. Yeah, it's taken as closing only, but they have just skipped computation of dividend is fully skipped in the solution there. It's not technically correct because dividend should be reduced. They have not done any dividend adjustment itself. Correct? Inga mattum panna, but that they will do pre-acquisition, but current year profits only I will declare current year profits. That's it, some over, no working note. Okay, no worries. Okay, technically the answer what is there over here is not correct. I can 100% tell that because here they have not considered in the solution dividend of current year, because 10% means it should be dividend of current year. They have not considered that. If you consider, the sum will have a reduction and it will become little more complex. So, for the time being, what we will do to match our answer with that, we will first assume that I will make change in the question. Okay. Yes. So, the company have declared dividend of 10%. So, okay. So, what Rushmita is saying is previous year is already this 6. Correct. So, this 600 and 500 belongs to. No. See, companies have declared for both previous and current year. So, this 600, 500 is what? No, how can it compress both previous and current year? No, if it's, then mathematically it should tally up. 10% on equity shares means 10% on this should be 1,200 and 1,000. That means this represents only to 1 year, which is my previous year, because current year I will declare only after the year gets over. How will current year dividend be there in my balance sheet? This dividend payable is payable accounted during the year. Accounted during the year means it's accounted for previous year. See, if you look at the timeline for a normal company, opening, closing, and only after this we declare dividend. That means dividend is declared only after the year gets over. That means in closing balance sheet already if dividend is there, that means it was declared sometime during the year which was for the previous year. That means current year I am still yet to account for that dividend. Are you understanding? So if I have to account for current year, I have to reduce what? 500. Are you understanding? So I have to reduce 500 from my current year profits and make it 290, but over here they have not taken that reduction. Ideally it should be reduced. I will show you the same adjustment in a different sum where a reduction will be done. We have it in the book itself in a full-fledged sum. So this sum, how do you want to do? Reduce and do the sum, or ignore that current year dividend and do only for previous year? Which one? Reduce. Okay. See, if you don't reduce, sum is very easy. Sum gets over. So if I reduce 500 over here, opening balance fully pre, this is post 290. Are you following, guys? Anjana, understanding? I have to reduce dividend for the current year because as per balance sheet, dividend is there only for the previous year. So my reserves will decrease in the current year. Mandatory, I can give 100% for that. Okay. This is for P&L. You will reduce it. Next. Similarly, you have done for P&L, we have to do for. Are you understanding why we are reducing dividend in the current year post, guys? Because we are declaring. Okay. So this is the balance post that is available after declaring dividend. Next, similarly, I will do for general reserve. What is the general reserve balance given in question? 800. So don't care about holding, only subsidiary. 800. Full 800 is what, guys? Fully pre, because question is given. The general reserve is brought forward from the previous year. That means fully it is pre. Are you following? Everybody understanding, guys? But this dividend which is declared is still not yet paid. It's still not yet paid. So this will still be a liability only. Now let's prepare our magic table. If this table is done, sum is over. So particulars, total, A is holding, B is subsidiary. That's what is given. So I will write A is holding and I need minority interest. Correct. First, total pre, total post. Also I will write share capital. Correct. Because my table needs everything. What is total pre we computed above? 1 lakh plus 8. This 10 lakhs, sir. Correct. Rupees in thousands. 10 lakh plus 8 lakhs. Total pre will be 18 lakhs. Guys, are you following? What is total post as per the question? 2 lakh 90 plus, that's it, only 2 lakh 90. What is A's share? 75%, 25%. Here 13 lakh 50,000. Post is here 4 lakh 50. Post you split, guys. 2 lakh 17,500 and this one is 72,500. Share capital given in the question is 5,000,000, 50 lakhs. Correct? 50 lakhs. So pre holding will be how much, guys? Into 75% and into 25. How much you are getting? 30. Are you following, guys? Everybody understanding? Hello? Now you know, with this table we can start easily. Each of the steps we can do. Now follow. Minority is what, guys? Total of all of this. How much you are getting? 17 lakh 72,500. This will not tally with the book answer. because we reduced 500. So the difference will be 500. Let's cross check. Minority, we got how much, guys? 17 lakh. 72. Look at this. Our share capital is matching. Leave preference. I'll come back to preference. Question is having preference of. Leave that. I will come back to that preference later. Okay. P&L. General reserve also will match 8 lakhs into 1/4. They took the whole 17 lakh 90,000. We took after minusing 5 lakhs because it goes into dividend payable. That is the only difference that will be there. Are you following, guys? But on logic, what happens? Apart from this, minority means what is payable to the minority of. Dividend also is payable to them. So I will add a dividend payable. If you want to tally with the book answer only, it will be 5 lakhs into dividend is 5 lakhs or 6 lakhs, sir? 5 lakh into 25%, how much? 1 lakh 25. Now you will get how much? 18 lakhs 97,500. Here also you can see 18 lakh 97,500. Leave preference shares. I am here to teach you that concept. Are you following, guys? So the only, can you see the difference? Technically this only is correct because dividend is declared. It has see if I have to tell you logically, 18 lakh 97,500 is the share of minority. In that, what I am going to pay you now is how much? 1 lakh 25,000 dividend. What I will not pay you now, but it's going to be your share, which will be carried forward as 17 lakh 72,500. Are you getting it, guys? So I'm tallying with the book. Clear? Sir, why are they adding preference shares? Different concept. Preference shares is part of minority. I will explain later. It's a very simple concept. We will keep preference shares as separate discussion. Are you following, guys? Done with minority. Everybody clear? Now goodwill. What is goodwill computation? What we paid against what we got. So in this table, what you will take for goodwill, guys? What we pay, what we got? 13 lakh 50 and total share capital 37 lakh 50. Total is how much? 13 lakh 50 plus 37 lakh 50. 51 lakhs. So what I got is 51 lakhs. How much you paid, guys? Cost of investment. Check the question. Have they given somewhere? Investments is 16 lakh 20. We have to compute only. Anywhere else have they given the data? No. 3/4 share, yes. Correct. You are right. So we have to compute only. They purchased how much, guys? 3/4. So subsidiary has how many shares, sir? 50 lakhs. In this I purchased 75%. How much is that? 37 lakh 50,000. But question is given by paying a premium of 25. So I purchased 37 lakh 50 by adding 25% into 125% or plus 25. How much are you getting? 46 lakh 87. Are you understanding? I purchased 3/4 for 37 lakh 50 plus 25%. You get 46 lakh 87,500. So you get 46 lakh 87,500 is what I paid for this. You are getting capital reserve of 4 lakh 12,500. This will tally with the book. Oh yeah, pre-acquisition dividend. You are right. So from this I will reduce pre-acquisition dividend 3 lakh 75,000. Perfect, because dividend declared is 5 lakhs. In that my share is 75, dividend of previous year. So minus 3 lakh 75. How much are you getting? 43 lakh 12,500 minus 51 lakhs. How much are you getting? 7 lakh 87,500 as capital reserve. Let me check if it's correct. Where is that? Yeah, 7 lakh 87,500. Are you following? Now look at this. Cost of investment, we got it same into 46. This one less dividend. Then net assets is 37 lakh 50 plus pre-acquisition, you get 7 lakh 87. Are you understanding, guys? Now I want to know why this alone is tallying, not minority. Why only this is tallying with the book? Why dividend is not adjusting here? Because for purpose of goodwill and capital reserve, we are considering only pre, and the adjustment that we did happened in post. Are you following up? That's why minority went for a change. This happened fully in pre. Are you following, guys? Understanding? Anybody has a doubt here? Yes, Sushmita.
But here they are made a provision, they are made a liability for the dividend payment. Can't we assume that it is actually from the pre and go by the provision?
Can't we assume dividend is from? So your doubt is, why are we subtracting 500 over here? That's the doubt. Okay, simple. See, if you don't subtract 500, sum is easy. It's over. It'll tally. Correct. So look at this. The directors of both the companies have declared dividend of 10% on equity shares for previous and current year. So your assumption is previous is declared and paid. So you are saying this. No, they can declare for 2 years together. They can do it. So here, see, the thing is, what does this represent then? This 600 and 500 is dividend of. Mathematically, it's 10% of this. Is it dividend of this year or previous year? If it is dividend of this year, then you cannot reduce here. Correct? You can't reduce that. That means if the book is reducing it over here, that means this dividend is dividend of previous year using pre-acquisition. That means dividend of current year, they have not yet accounted. If you take your assumption as to, sir, this is the dividend of current year, then they should not be reducing it over here. Are you following up? That means this dividend declared using pre-acquisition profits. So either this should not be there or this should be here, reduction here, and we should have reduction like how we did, reduction of 500. Are you following? Got it, Rashmita? Everybody clear? Kalyan? Clear? Okay. Just hold on online. Everybody understood this sum, guys? Clear? Hello? Sure. See, if this dividend alone is not there, everything is clear. Everybody fine? Okay. Leave the preference share part, I'll come to it later. Anyway, you have seen preference share is part of minority. I will tell the logic a little later. One line logic, we are calling them as minority because they have minority in what? Capital and control. Correct? Preference shareholders don't even have control. So where to show them? Because I don't have any other place to show them, I will show them as part of minority. We have a separate discussion for that, but for exam viewpoint, beyond this not needed. My preference is minority because they don't have voting power. That's it. Next is question number 9, but before that, let's go to additional questions and do a sum. That's it. This chapter is now left with only sums. Whenever you want a break, tell me, I'll give you a short break. That's your call. Yes, guys, do you want break now or one more sum and break? One more sum and break. Let me go to additional sums. Okay, do you want to do a full-fledged sum or small sum? I'm just seeing which sum we can take now. 9 we can do if nothing else is there. This is Anushka and Virata. 11 also we have done. 11 done, no? 11 finished. Virat Anushka also is over. Okay. From now, whatever sum is left, they are only big sums, guys. We have finished all the leave 14. This consolidated P&L. Yeah. Yeah. Now all the sums are only big sums, guys. So each sum will take us half an hour from now. So we can start off with question number 9 over. No, 9 now we have to do. Okay. So 9 is what we're going to do next. It will take half an hour. You want to do now or you want to break? Break. Okay, fine. So clear with consolidation, guys. So with this, all the small type of sums are done. The remaining 4-5 sums are big sums. And remember, so far I have been teaching only consolidated balance sheet. We also have concept of consolidated because consolidation is consolidation of financial statements. So you have to consolidate P&L. Financial statement also includes consolidated cash flow. That also we have to do. For consolidated P&L and cash flow, we only have one sum in the book. Very easy. We will do that later. Remaining all sums are consolidated balance sheet, which we will see in the next session. Go for a short break. We will resume in 10 minutes. Recording next video. Thank you.